Good morning, everyone. We welcome you back to our sessions on the National Risk Assessment. We had already the first episode split into two parts in which we went through overview, but we started going into some detail as well on the National Risk Assessment and its contents. Today we're back with the second episode, and this time we're going to zoom in to the banking sector. We're going to start digging deeper into the first part of Section 10 of the NRA that deals with the banking sector. So I'd like to welcome Mark Drago, who is the MLRO and Head of Financial Crime Compliance at HSBC Bank Malta, and Mr. Ryan Caruana, who is the MLRO and Chief AFC Officer at Bank of Valletta. So what we're going to be doing today, we're going to have Martina, who's going to run us through the findings that deal specifically with banks. The first part, 10.1.1 of the NRA, that deals with the findings in relation to the inherent risk and the residual risk of going through the controls that banks have in place. After that, we'll have a discussion, just like we had last time, zooming into certain findings that we find particularly interesting. There's a lot to discuss on what is being said about the banks themselves, but also on certain generic themes: immovable property, citizenship by investment, potential customers of the bank, so categories of customers, gaming clients, corporate service providers. So we have quite a bit to discuss in today's session. So Martina, if you can just run us through the main findings in relation to banks, and then we'll take it from there.
As at December 2022, according to the data which was analysed, Maltese credit institutions serviced around 1.4 million customers. And out of that 1.4 million customers, 97% were actually individual customers, and only 3% were non-individual customers, which I think is quite interesting statistic, obviously when you're looking at the type of customers that are being onboarded. In the statistics, they also mention some data collected by the Central Bank of Malta, which indicated that around 71% of total value of cross-border payments were actually remitted to and or received from EU countries, whereas only 29% were linked to non-EU countries. And again, these non-EU countries were not considered, at least the top three, were not considered to be particularly high risk. I mean, it was US, Switzerland, and there was also South Africa featuring in the top three.
South Africa recently was on the grey list, yes. So obviously there was a bit of a shift over there. But the data relates to a time when South Africa wasn't yet grey listed.
71% are all within the EU. So I mean, it's quite a high percentage of the transactions. The NRA also goes on to explain that banks have started this de-risking exercise and are being more conscious as to the type of customers that they are onboarding. According to the data collected from the FIAU, they actually terminated around 32,000 relationships with customers, mainly because these were posing a high MLFT risk, or because they no longer fell within the bank's customer acceptance policy. They identified these customers as being mainly those benefiting from the citizenship by investment schemes, those that did not have an apparent substance in Malta, those transacting with high-risk jurisdictions, those having complex structures, and also those customers to whom correspondent banking services were provided. In terms of the main predicate offences that were identified in credit institutions, the NRA actually gives us an analysis of the STRs that were submitted by credit institutions, and it appears that the majority of the STRs had a predicate offence related to tax crimes. However, what is identified in the NRA is that it appears that these tax crimes are mainly the proceeds of domestic tax. So the laundering of proceeds of foreign tax crime, according to the NRA, is limited when it comes to credit institutions. They're saying that basically foreign tax crime is more common with financial institutions rather than with credit institutions. And I think this is a point we'll go into a little bit more detail later on. The NRA also goes into the main threats. I mean, there's a whole list of threats that were identified when it comes to money laundering. However, I think the most common or the highest threat level mainly came from exposure to high-risk jurisdictions due to the processing of international payments. The high-risk jurisdictions do not appear to be the main target jurisdictions. However, this was marked as a high threat level. They also mention the servicing of non-resident customers and/or beneficial owners. Obviously, this is a jurisdictional exposure as well. They also talk about the use of bank accounts to place cash derived from proceeds of domestic crime in the financial system. This was rated as medium-high. And again, similar to what we mentioned before, the use of bank accounts to launder proceeds of domestic tax crimes was also rated as medium-high.
So there's a focus on domestic, which I think we can definitely discuss later.
They also mentioned trade-based money laundering. They rate it as being medium-high. However, there isn't really much detail as to why, or maybe a bit more of an explanation as to what led them to have this high threat level. And then there are some other threats that were mentioned, like onboarding higher risk customers like PEPs, cash-intensive businesses, etc. The proceeds of foreign tax crime is actually rated as medium, so compared to the domestic tax crime, obviously it's significantly lower.
Even compared to other sectors.
Yes.
If you look at the financial institutions section, there's more of an international element when they look at the tax crime risk.
Exactly. The NRA actually states that the laundering, or at least the cases of money laundering occurring through organized crime groups through the credit institutions appears to have been, there have been a reduction in it, which obviously, I don't really know, the statistics haven't been published in the NRA. However, they say that from the data that they collected, it appears that this is on the decrease. They also mention the safe deposit boxes, for example, as being medium-low in terms of the vulnerability level, which, when you think about it, makes sense because they are also saying that the number of banks offering safe deposit boxes has decreased. So that's the reason why, obviously, it's no longer considered to be a high-risk area.
So there's a vulnerability within a bank that has safe deposit boxes, but as a jurisdiction, the vulnerability is under control because a lot of banks, as we know today, have exited that area.
Exactly. And the same can be said with prepaid cards. It's been rated as medium-low, not because prepaid cards are low risk, but because the exposure of the jurisdiction to prepaid cards is actually low because not many banks are offering this service anymore. They also mention as a high money laundering vulnerability the pooled accounts, which we'll be going into later on. They mention trade finance, like I mentioned before as well. And ATMs obviously being higher risk for obvious reasons, obviously because of the cash deposits, etc. But they also mention that the banks do have a lot of controls around the ATMs, which obviously reduces the risk of money laundering occurring through ATMs. And in fact, they've rated it as medium.
And they did this within the context of non-face-to-face transactions, I believe, together with non-face-to-face onboarding, etc.
And they also mentioned the exposure to correspondent banking. The exposure of the jurisdiction is actually low now because apparently not many customers who use correspondent banking services are being actually serviced by the banks. There was a decrease, there was a decline.
Downstream correspondent banking.
Yes. Then they go on to explain the effectiveness of the mitigating measures, saying that the controls are pretty strong. They say even from not only the banks have strong controls, but even the supervisors and the jurisdiction as a whole has obviously increased the mitigating measures. And they mentioned, for example, the withdrawal of banking licenses, that there were a lot of compliance reviews that were carried out by the MFSA and the FIAU, and enforcement measures that were taken on banks as well. They also mention some recommendations for banks, and I think one important one is that they say that banks need to strengthen their transaction monitoring systems, but in particular to identify emerging risks, they say, which is quite an interesting thing, a point I think they make. And they mention as an emerging risk, they actually mention cash transaction relating to criminal proceeds, misuse of pooled accounts, transactions relating to trade finance, and trade-based money laundering or tax crime indicators. And so this is something that apparently the authorities are saying that needs to be improved in the banking sector. In terms of residual risk, overall, the residual risk of the credit institutions was actually rated as medium, which I believe, considering everything that we've just discussed in terms of the controls, etc., it's self-explanatory. The controls are very good.
And that's actually an improvement from the previous NRA, which was medium to high.
Exactly. So there was a downward shift in the residual risk, again because of the controls, because they've improved.
Within the sector, within the areas that the sector services, within the jurisdiction at large, in essence.
Exactly.
Yes, especially with the culture overall in the country, because this is not something that can be done by banks, but also by our customers who participate and cooperate with the banks.
The NRA also gives a little bit more detail in relation to terrorist financing risks, specifically for the banking sector. To be honest, I would have liked to see a little bit more detail to understand the actual sort of reasoning behind the results. But what they're saying is that basically one of the threat, it's quite a high threat level, they've rated it as medium high, is the movement of funds for terrorist financing via credit institutions. And in fact, they've rated this as medium high. They said that the controls in place by the banks to mitigate this risk is actually quite good. It's rated as high. So the residual risk then is medium. They also speak about proliferation financing and targeted financial sanctions. And again, here they mention trade finance products. And they also mentioned use of personal accounts to purchase industrial items. And they've rated this as being a medium high threat level. But and then, considering that the controls are quite good, this is reduced then to a medium level. However, the use of trade finance products and services in procurement of proliferation sensitive goods still remains at a medium high residual risk. So obviously maybe more needs to be done in that area when it comes to the controls of the banks.
So you mentioned trade-based money laundering, you mentioned proliferation finance, you mentioned terrorism financing, right? And there are conclusions in the NRA that sort of direct us to give this area some more importance. I don't know, I'm going to address Ryan and Mark on this. Sort of when you read the NRA, how granular is it to give you enough insight as to why certain areas, like the ones I just mentioned, are actually higher risk and what you need to do to sort of deal with those specific areas? To me, at least when I read the part on trade-based money laundering, it speaks about higher values, so obviously there's going to be higher risk, but there isn't really any narrative as to what one needs to do further and what has triggered this added attention to these areas.
From the summary you highlighted, I think it's easily understood that such areas, especially trade-based and terrorist financing, by their nature, are always to be of a high risk. I would say for two major highlights. One of the issue is that even Martina highlighted transaction monitoring emerging risks, that by nature such activities are totally different than money laundering, than the other conventional financial crime that we are used to, right? On the first case, higher transactions, more evident, potentially supporting documentation can be a bit tricky in itself. When it comes to terrorist financing, trade-based money laundering, it is more challenging, first and foremost, to detect, even for our controls for transaction monitoring, because in itself, when it comes to terrorist financing, there could be of a legitimate situations, and I think if we can see Europe and fortunately enough, Malta, there was a lot of cases related to terrorist financing. But in Europe and around the world, we see certain cases that even, I would say, huge financial institutions have been victims of. So that in itself shows how difficult it is. And secondly, when it comes to trade-based, I think financial institutions, credit institutions at large, whatever we ask for, they have limited evidence of when we can compare and contrast the supporting documentation, transactions, and what is really happening when it comes to trade-based. So I think that is one of the most important elements. Yet again, even on the NRA, there is a lot of information when it comes to the conventional crimes, but when it comes to TF, this is, and trade-based, potentially this is, yet again, limited. Even if I'm not mistaken, when it comes to STRs, they mention that there are not a lot of STRs on this. So by default, that highlights that there is not much information to work with, to start with. Yet again, the most important element is that for credit institution to keep understanding the risk around such. And I would say be wary, be cautious of certain transactions which are tied up with certain jurisdictions, with certain nationalities, that unfortunately make them more prone to certain elements, to understand how this looks. Yet again, and I will stop on this, certain methodologies, approaches, at times are not even touching credit institutions. Like I mentioned, Hawala, for instance, right? Potentially it never touch a credit institution, is just an unlicensed banking activity at most, you see. So this is potentially then the highlights of the NRA when it comes to trade-based and terrorist financing.
And the NRA doesn't go into these alternative remittance systems that are unlicensed. So the risk that is identified in the NRA is mainly the regulated financial services that we're familiar with. So it doesn't go into other sectors that fall under the radar, and that is, I would say, that isn't as helpful as it could have been. Let's say that in that respect. So there's no mention of the extent to which that we have hawalas or hawadas or whatever other remittance system.
I agree to that. Yet again, I think even my colleague here, Mark, spoke regularly on such instances on this. The limited information keeps on making it difficult and more challenging, I think, for the jurisdiction, right? Yet again, these are areas where we really need to continue focusing on, even considering the impact that they can have on the jurisdiction itself, rather than on a particular financial institution alone.
And it's a message as well for the authorities, the National Coordination Committee in particular, that is already working on the next NRA, because they promised that the next NRA should be with us within the next 12 months, I believe they said. So ultimately, I think this is, as we said in the first episode, a major improvement over past exercises, because it is more detailed. There clearly are areas that we need to go into in more detail. I don't know, Mark, your thoughts on this, especially on the fact as well that certain areas, like we mentioned, focus on the generic risk, as Ryan said, of, I don't know, trade-based money laundering, of proliferation finance, of terrorism financing, rather than the Malta risk, the domestic aspect, the domestic elements of, okay, yes, it's difficult to identify trade-based money laundering because I'm not going to go and check each and every container. I can't as a bank. I'm too distant from the transaction, and all I'm seeing is documentation. Yeah, but to what extent is Malta exposed to this risk? Is it because we have a lot of trade-based trade finance and trade-based business? You know, so how helpful is the document in this?
In this regard, I think there needs to be more details. However, we need to keep in mind as well that from a banking perspective, we file STRs without knowing the exact predicate offense. So some of the data in our STRs as a bank, we see something that is not in line with what we expect from the customer, what he told us, etc., etc. It doesn't mean that we really know exactly what the predicate offense is. So that data needs to come from outside the banking sector, and maybe in trade-based money laundering as well, even from data coming from foreign authorities as well, because trade-based is not a domestic thing, but it moves from one country to the other. And if I had to say something about the NRA improvements, yes, it's an important aspect as well from a trade-based money laundering point of view, because although there is a short description on the inherent risk, but we need to have more specific inherent risk, because as a bank we use the NRA to understand the inherent risk and how that is impacting our day-to-day transactional activity, what the threat vector is. But having a generic statement is not very helpful. I do not expect the NRA to tell me what controls I need to adopt, but at least to understand a bit better what the inherent risk is and the different threat vectors, because trade-based money laundering is a very wide. You can have very low risk areas in it, like guarantees, etc., and then but you can have higher risk when you have movements of goods, shipping, VAT fraud can come into play here as well. So we do need, I think, in that area. But there's also a fine line, or you need to find the right balance between obtaining information, because even the banking sector and subject persons are having to report a lot of information to different authorities. And so you have to find the right balance as well between getting the information and then using that information to provide more in-depth analysis of the inherent risk.
You mentioned STRs, right? And the risk with an NRA is that sort of you give the authorities information in terms of you submit your STRs and then they analyze the type of STR and the sector concerned, etc. So the risk is that in the NRA you get back the information that you yourself have submitted. But what was good in this exercise, and it comes out very clearly, is that they also looked at other information, among which the exchange of information between the authorities in Malta and other authorities. So law enforcement information, letters rogatory, and requests for information by foreign competent authorities. So ultimately there's also an analysis of what we are being requested as a jurisdiction. And what type of crimes are of interest to the counterparts abroad. Now, if we look at the STR submitted by banks, a large percentage relates to domestic tax crime. Sort of this ends up then in the NRA as sort of one of the categories where there is higher risk for banks. Even as I mentioned before, you compare it to financial institutions, it's different because the focus is more on international tax, so the proceeds of crime are foreign proceeds. So seeing all of this, then you compare it with the higher areas of threat. So if you look at the first part of the NRA, it speaks about organized crime and drug trafficking being the higher risk predicate offenses for money laundering. So sort of what the banks are reporting and what at least has been identified by the NRA as being the more serious areas is not in sync. So what are your comments on this? What's your reaction?
I think I'm even tying up what Mark was saying actually, that when banks are reporting STRs, we are having a suspicious level of financial crime, which at times is very challenging to really and truly understand the real typology, the real red flag when it comes to investigating. There are some cases which are more straightforward, so that you can easily understand certain issues. There are other cases which there is the suspicious of financial crime without potentially knowing the real red flag. So this may ties up then with what the NRA is highlighting, because we may think that this customer X, is just evading tax. We're seeing potentially unknown source of funds, different turnovers than what is expected. It's not making sense with the CDD KYC that we have, and that's one thing. And we think it's just tax evasion. However, potentially, and I think this is the case, that authorities has a much larger and broader picture when it comes to investigation. So what we are seeing then, it can ties up with organized crime, drug trafficking, and we are seeing just the end of it. So we are saying that there is a cash-intensive business, potentially a self-employed individual, that we think that he's just not declaring everything because he's doing much more than he's telling the bank. However, from a broader investigation, that might lead that individual is not really only doing this, but potentially he's also having an illicit activity going on then tax crime is there, but also other red flags, which are drug trafficking, organized crime, and all the highlights mentioned in there. So I think maybe this is one of the reasons then we need to put into perspective, right? Or even highlighting what Mark said earlier, that the banks at times have limited knowledge of what is really happening. Even Manfred, what you highlighted through trade-based earlier on, that we cannot go inject containers, so it's much on those highlights on what we highlight.
And the responsibility of the bank is to raise an STR, and then it's the authorities that ultimately see the broader picture and go into.
There are 2 points here as well that I would like to add. First of all, the NRA states as well that there is evidence that organized crime, their funds are not going into the banking sector. So they are using other methods to launder their money in real estate, cars, and luxury goods and investments abroad. And secondly, as we mentioned already, we would not know exactly the predicate offense in most of the cases. However, for example, in the NRA, in the same section as well, it talks about fraud. And we have seen an increase of scams, online scams especially. And behind those, most probably, there is an organized crime group that is perpetrating this massive fraud across multiple countries. So although the bank would file an STR because of a fraudulent payment, we will not file against the organization itself. We file most probably even on the victim. Why? Because once we know that there is an account somewhere, most probably even outside of Malta, that is receiving funds from a fraudulent activity from a victim, that account in itself is being used for money laundering because it's receiving proceeds of crime. And we do report that. So although we are not reporting directly, we are giving the information, and that's why the FIU is there as well as an analysis unit, intelligence, to be able to work with other jurisdictions to break these organized criminals. Because organized crime, I think they do not perpetrate one type of offense, they have multiple. Drugs, fraud, scams. So they do a lot of it, money laundering itself. So you have criminals that their job is just to launder money. So every single STR might be a small fraction showing that behind it, it could be a big organized crime group.